Starting with the 2011 A-level paper, question number 6. Now, little by little, we'll work on answers. You all will see how easy things become. So, question number 6. Remember, guys, this doesn't change. Huh? Every year, 2011 to 2022, every single year, question number 6 is from money and banking. Every year. There are no combined questions from money and banking. There are no years that there was no money and banking questions. Every year, question number 6 is money and banking, and that's not going to change. So you don't have to have a doubt. So what if they don't test this unit? What if they, ask 2 questions from this unit? What if they ask only half a question? That is not going to happen. So question number 6, part 1. What is meant by double coincidence of bonds? What is double coincidence of bonds, guys? It was one of the main necessity in barter system for barter trade to happen. But what does this mean? What is double coincidence of bonds? Double coincidence of bonds by, guys, yes, okay, you can say multiple compatibility. It's a very simple thing like this, okay? Let's say there is me, okay? Let's say there is me. I have apples. I have apples. Then there is you, right? Since there is a majority of girls here, I'll draw a girl, okay? Let's say you have, let's say rice, okay? I am a producer of apples. You're a producer of rice. So for exchange to happen, guys, for exchange to happen, okay, there needs to be a double coincidence of bonds, we say. What does that mean? That means, right, I should want rice. You should want apples. So I should want what you have. You should want what I have. Only then trade can happen. Now, let's say, for example, I have apples, but I want, let's say, oranges. I can't trade with you because you have rice. You have rice, let's say you want pumpkin. You can't trade with me. So for exchange to happen, guys, person A should want what person B has. Person B should want what person A has. Both should want what each other wants, what each other has. That is what you call double coincidence of bonds. Now, how can you put this in formal writing? You can say something like, each party, right? So let's say person A and B should want what the other has, right? You should want what the other person has. Both need to have that. I need to want what you have. You need to want what I have. So only if this happens, there will be trade between the two of us. Now, this was one of the biggest limitation where in the barter system, because it's very hard. Now, for example, let's say I am willing to teach you all. I am willing to offer classes. Okay. You all want classes from me, but you all are giving me, let's say, something else. Let's say there was no money. You all are willing to give me, let's say, oranges. I don't want oranges. I am saying, no, I want, let's say, clothes. So we will never be able to have that class if there was no money. So to solve this only, what happened, guys? To solve this, money came into play. So when there was money, this whole need for double coincidence of bonds was eliminated. I will sell my classes and get money. With that money, I will go and buy whatever I want. I don't have to find someone who wants what I have and I should want what he has. That doesn't have to be there. So money avoided the problem of double coincidence of bonds. Remember this story, how they ask you how money avoided this and how money led to division of labor and specialization. Remember, they test that in unit number 1. Go through that part, guys. Because of the introduction of money, how these issues of double coincidence of bonds were eliminated and all the problems in the barter system were eliminated, then people started to specialize. Now, because you can easily trade now, no? You produce something, you can sell. So people started to specialize in their stuff. And as a result, large scale production started. Then large scale production, division of labor was used there. So with that, so many things started to happen. So you need to explain, you don't have to explain all of those, how money came in. As long as you can explain what is double coincidence of bonds, say that it's an essential what thing that has to be there for barter trade to happen, you should be okay. Is that fine, guys? Question 6, number 1. You need to learn to put this into your own words now. Look at your answer scheme also. You all have a pathway book now. Look at what I explained also. Nicely write a small paragraph. You don't need much, it's a small 3-mark question. Then we'll go to part 2. Okay. This one I put the answer itself. Explain why credit cards are not money. Why are credit cards not money? Guys, when you talk about money, money is a financial asset. Money is something that you own, that you can get a benefit out from. But if you take credit cards, it's not an asset for you, no, guys. What's the credit card? You're using someone else's money, no? Whenever you go and swipe your credit card, exactly, that's a liability. That's a short-term loan that is created. You know, every time you go and swipe your credit card means now you have to pay that amount to the bank. You owe the bank that amount of money. So it's a liability move. See, they say here, a credit card is not money, but rather a mechanism for borrowing money. Credit card is not money, but it's a method to borrow money. Every time you go and swipe your credit card, you're borrowing some money here, which must be repaid. You have to repay this later. Now, if it was a financial asset, you don't have to repay, no, guys. That is yours, no. But credit cards, whenever you swipe, you have to repay. It's a liability. Here, it is just a card that lets you take out an instant loan when you make a purchase. Whenever you go and swipe your credit card, you're taking out an instant loan. Yeah, the signature placed when buying through a credit card confirms what? Confirms that I agree to pay for these goods when the credit card company bills me. So every time you, now the signature is also not there, but every time you sign and every time you purchase something, that is you're agreeing that when the credit card company bills me at the end of the month, I am willing to pay that. If they say credit cards do not perform the function of store of value, it is simply a temporary means of payment. We can say it's a temporary medium of exchange. The actual payment, to make the actual payment, money is required. At the end of the month only, the actual payment is made. At the end of the month, you go and settle your credit card company. You will need currency or bank account balance to repay the credit card company. Therefore, credit cards are not considered as money. It doesn't have to be the same answer, guys. But the key things that you have to highlight, you need to say that credit cards are not money. It's a method of borrowing money. It's a liability. What you are doing is whenever you're using your credit card, you're taking out an instant loan. The actual transaction happens probably at the end of the period. For that to happen, you have to physically take some money or transfer from your bank and you need to settle your credit card. You need to clearly highlight that it doesn't perform the function of a store of value also. It's only a temporary medium of exchange. As long as you have highlighted that, you all should get your 3 marks. Is that okay? Why are credit cards not money? But it's taken into money supply, that I'll explain later. There is a future question there. Okay. It is a time. No, it's not a store of wealth. Credit cards are not a store of wealth or store of value. Because that is not your money, no, Lamai. Now you're saying I have a credit card of 100,000. But that is not your money, no. That is not your money that has been stored there. That's a credit card limit. That's a loan that you have taken. That means you can, whenever you want, you can swipe up to or take up to 100,000. That is not your money. So you can't say that is a store of value. Can we consider it? Yeah, you can say it's kind of like a standard deferred payment. You can say that. You can say it performs the it functions as a standard of deferred payment. You swipe your card now and you pay for it later. You can give something like this. No problem. Okay. Going to question 3. The point important signature place. Point important. No, the signature place is not very important. No problem. Can we also talk about how it limits to use in certain transactions? I guess you can also say this, guys. You can also say credit cards are not legal tender. What is legal tender? Legal tender means it has to be accepted everywhere. No one can reject that. Now, for example, notes and coins we say are legal tender. If you pay notes and coins, no one can say, nah, card transaction, give me money. They can't say that. If now, for example, even if you, let's say, for example, come and pay your class fees in coins. Let's say you pay your mock exam fees 4,000 in coins, right? You give me all coins. I can't say no, give me in thousands, otherwise I'm not taking your class fee. No, because that is what? That is legal tender. So if I'm rejecting it, you can even put me in jail, saying that this fellow is refusing to take. So have you seen in any note or something, it says that it is always valid? Have you all seen that? It's I can't remember the exact singular terminology that says, for any transaction, it says something and valangui. I can't remember the exact term. Just look at a note that you all have. They say it's valid for any transaction inside the country. For electronic money and all of it, you can't say that, Lamai. Because sometimes you can reject. Now, let's say, for example, you're trying to pay your class fees using a bank transfer. I will say, no, I don't want bank transfer. That I have the right to do that. I can say, no, only if you come to my house and pay the class fee only, I'll take you the class. I can do that. But I can't ever reject money. Physical cash, I can't reject. Okay. So that is what you call legal tender. It is accepted anywhere. So you can say credit card does not have. A credit card does not have legal tender. You can highlight that as well. Okay. Then we'll go into 3. What are the 3 principal conditions required for a banking system to create money? What should happen, guys? For you to be able to create money, what should happen? For a banking system or a commercial bank, for them to create money? Number 1, okay? Number 1, the bank has to have what, Lamai? The bank has to have excess reserves, right? They need to have excess reserves. Okay, so bank has to have excess reserves. How do they get these excess reserves? Through demand deposits. So customers have to come and deposit and the bank has to have money. That is number 1. Okay. And then the banks has to be willing to lend those. There should be what case? Now banks have so much excess reserve, they are willing to give out as loans. But what if people don't want that loan? So on the other side, there needs to be a demand for loans. Okay. In addition to having that, there needs to be a demand for loans. That has to be there. Then for credit creation to happen, what else case? There needs to be a demand for loans. The banks need to have excess reserves with them. They have to have money with them. Oh, please don't misunderstand the first point saying that the banks have to maintain excess reserves. That's not what I'm saying. I'm saying that the banks need to have money. Otherwise, they can't give out loans. No, so if the banks don't have money, what to give? So then, what can you also say? What else, Lamai? Quickly. These are not that hard. There are more conditions. There are not 3. There are even more conditions that has to happen. Then, so there should be demand for loans. Then, what about this? You can say no cash drainage. Okay, there should not be, right? No cash drainage. What does that mean, Lamai? So this means whoever who takes a loan should do what? Whoever who takes the loan should deposit that entire money into another bank. That should also happen, right? So the party taking out the loan, should deposit it in full, should deposit it in full in another commercial bank. That has to happen. He can't take the money for his own self, and he can't do all of that. Okay, you can say cooperation among banks. So banks have to have proper cooperation. Money has to go from one bank from another bank. Cooperation. Hold on. From cooperation of banks. Then you can say things like what? Okay, banks should not maintain excess reserves. Okay. It's kind of like the assumptions of credit creation also. Customers should be creditworthy. Okay, you can add to this demand for loans part as well without giving it as a separate one. Then you can say customers should deal with this bank transaction. Now, if they have liquidity preference, if they wish to deal with cash, then that's going to be another problem. Okay, so then you should say bank should not maintain excess reserves. Bank should not maintain excess reserves. What does that mean? Any excess reserve should be given out as loan. Should be given out as loan. The first point, guys, you can reword this a little. Bank has to have excess reserves means, in other words, you can say they should, or you can say, say this is what is lent out. This is what is lent out. Okay. SRR and all, not a very condition. That is an assumption of credit creation that the SRR should not change. But that is not really a condition for you being able to create money. Even if the SRR changes, you can still create money. You can still engage in credit creation, not a problem. SRR, I don't feel, is a very important part here, guys. Okay, is that fine? Conditions that is needed for a commercial bank to create money. Reduce preference to hold money in cash, fine. People need to transact with bank. Then going to 4. Now this is a nice, interesting credit creation question. They're saying, suppose that a central bank purchases, boys, I'll send this to you all. Can you all take 2 minutes to fill this form? I'll send it in the past paper class group also. Maybe even in the break or something, you can fill it out. I'm planning to have like a small seminar series with different topics that are difficult for students. It will be a paid one, Lamai. I have not finalized the price, but I'll look at a very reasonable price. Don't worry. I have sent a link on the past paper class group. You can just fill that out, letting me know what topics that it's hard. So then, because I need to finalize the topics to do also, and then later I'll let you all know what topics I have finalized and all. You can take 1 or 2 minutes and fill out that form. And when you all are giving the areas that are difficult, try to be more specific, Lamai. The form, okay, let me try to send it on Zoom also, right? Try to be specific rather than saying unit number 10, unit number 11. Be very specific. What in unit number 10? That will make it more easier for me because I might not be able to teach the entire unit number 10. So if you can be very specific, I'll send it on the wait. I'll send it on the Zoom chat here as well, right? So you all can take maybe 2 minutes and fill that out. Okay. So, right. Question number 4. Suppose that the central bank purchases a bond for 100,000 from a brokerage firm, which deposits the proceeds in one of the commercial banks. So there is a brokerage firm. Central bank is purchasing a bond from them. Then the brokerage firm, that 100,000 that they got, they have come and deposited this in a commercial bank. They are asking you, what will be the impact of this transaction on the supply of money? What's going to happen, guys? When the brokerage firm comes and deposits this 100,000 into the banking system or into one of these banks, what will happen to money supply? Increase or decrease? You can say money supply will increase. By how much, guys? Now, here they have not spoken about a SRR or anything yet. No. So, initially, by how much will money supply increase? Money supply is currency held by public and demand deposits. So, you can say money supply will increase by how much? Will increase by rupees 100,000. So initially it will increase by 100,000. Probably in the second requirement only they give the SRR and all. Here they have not talked about the SRR. So there is no multiplier for you to work with. So this is just the brokerage firm coming and putting 100,000 into a commercial bank. So therefore money supply, demand deposits go up by 100,000. Remember, money supply is what, Lamai? Money supply is currency held by public plus demand deposits. No. So when this firm comes and puts the 100,000, demand deposits go up by 100. Later they will give out that as loans and credit creation will happen. Later this will go up by even more. But for now, money supply goes up by 100. Okay, part B. If the reserve, now they are saying it here, if the reserve ratio is 20%, isn't money supply CC plus? What is it? No, money supply is currency held by public and demand deposits, guys. Not demand deposit divided by currency held by public. Right? If the reserve ratio is 20%, what is the maximum amount of additional loans what this commercial bank will be able to lend? Very easy, no? So if the 100,000, past is 10,000, is it 10,000 or 100,000? Have I typed it wrong? 100? I know. Let's be 100. Okay. Okay. Right. Then, yes, maybe a printing mistake. Okay. So what is the maximum amount of additional loans, guys? Tell me. When 100,000 comes to this bank, they are saying SRR is 20%. That means this bank has to keep how much? They have to keep 20,000 as required reserves. So how much can they give out as loans then? Are these questions, no? How much can they give out as loans? What is the additional lending that they can give out? From the 100,000, if they have to keep 20,000, the balance excess reserve, the balance 80,000 can be given out as loans, no? So you can say the remaining 80,000, the remaining 80,000 can be given out as loans. That is your answer. Say that 100,000 came in, required reserves are 20,000. So remaining 80,000 can be given out as loans. You get your 2 marks. Very easy. Then part C. Given the 20% reserve requirement, what is the maximum increase in the amount of deposits that could result throughout the entire banking system because of the central bank's action? What is this? Now you have to use the deposit multiplier, no? Because of this 100,000 that came in, right now, this will go no, from one bank to another bank to, it will go. They're asking at the end in the banking system, how much of reserves would be there? Remember, I explained this in my YouTube video. 100,000 comes, goes. They're asking you how much will be over here. So how much is going to be over here, guys? How are you going to find that? You use the deposit multiplier, no? How much is our deposit multiplier, Lamai? If the SRR is 20%, deposit multiplier equals 1 over SR. So that is 1 over 0.2, 20%. That's a 5 times. So then this 100,000 gets multiplied by 5 times. How much of deposits will we have in the banking system at the end? We'll have a 500,000 worth of deposits. That is your answer. In part A, how money supply will increase, because demand deposits are increasing. What is happening in part A? A brokerage firm is depositing that money in a commercial bank. Remember, money supply is currency held by public and demand deposits. So demand deposits are going up by 100. Brokerage firm does that. Okay. No, you don't multiply the 80 by this. They're asking you by how much the demand deposits will go up by now. So how do you find total deposits, Lamai? Remember, total deposits equals initial deposit into the deposit multiplier. So initial deposit 100,000 came, deposit multiplier is 5 times. So total deposits of 500 will be created. That's what you're doing. What's that YouTube video? It's there. Fine. Is that okay? No, it's not 400,000, guys. It has to be 500. What is the maximum increase in the amount of deposits that could result throughout the entire banking system? So 100,000 came at the end of the day after all credit creation. This would have become 500,000. That's what they're asking. You don't have to get the difference. Just check the past paper. 500, right? I have not gone through the answer. What does the answer say? 2011 question number 4C. 500. Okay. Right, that's fine. Okay, that is that. Then part D. Would you expect this to happen? Would this actually happen? Would the 100,000 actually get multiplied by 5 and become 500,000 at the end of the day? Would it happen? Would you expect this to happen? No. Can you give me some reasons, guys, why this might not happen? It might not be as big as 500,000. Why? In reality, it might be comparatively lesser. Okay, so there can be cash drains. So there can be the public who takes these loans might not be putting the entire thing into another bank, right? That can happen. Okay, so there might be banks holding on to excess reserves. So banks are not giving the entire thing as loans. They are not giving the entire thing as loans. They are keeping excess reserves. Maybe the demand for loans have come down. Demand for loans has decreased. Maybe that can be, or you can say there is no demand for loans. Then maybe the SRR has increased or decreased. You can say there could have been a change in SRR. So that 100,000 would not become 500. It can be more also, it can be less also. Okay. Blacklisted, not a main point. Then you can say cash drains, that is public not depositing the entire money into another commercial bank. You can also say public putting the money into the other financial institutions. Now, only if the money comes to commercial banks, there will be credit creation. What if the money goes to a registered finance company or something like that? Then also it stops the whole process. So all of this, you can, say no, and you can give in certain reasons, guys. It's only a 2-mark question, but this is a very common essay question after a credit creation calculation. So many of times, yes, you can say withdrawal, public withdrawing money, no problems. That is also you can connect with cash drains. So withdrawal of money from commercial bank. So you can give in reasons like that and say, look here, this is why it wouldn't happen. Put a star and keep. This is a very common question after every credit creation sum. Usually, most of the time, after a credit creation calculation, they ask, would you expect this to actually happen? Answer is no. Because credit creation, guys, has so many assumptions, has so many unrealistic assumptions. When you take a loan from one bank, will you go and deposit that fully in another bank? You're taking a loan because you don't have money. See, so many unrealistic. They are assuming that when one person takes a loan, he will go and put that same thing in another bank Doesn't happen, right? And then in reality, banks will obviously keep excess reserves because banks have to maintain liquidity. That is one of their objectives. So from the deposits that the customers bring, they won't only keep the SRR aside. They will keep excess reserves also, because what if the customer comes tomorrow and asks for the money? So banks will definitely maintain excess reserves. People will not go and put the entire thing into another bank, right? Money will definitely flow out from this bank to other financial institutions. People will withdraw money. So in reality, it's completely different. But in econ, to simplify things, to understand how it works, that's why so many assumptions are made, Laman. So in practice, it might not work this way. Now I'll tell you. Now I teach theory econ here. No? Now in reality, in office, we work with practical econ stuff. Now in theory, we learn, okay, if this goes up, this will go down. But in practice, now when at office, when I look at it, when we look at the data and see, no, it's not happening. Now usually we see, okay, if the exchange rate depreciates, Marshall Lerner condition holds, exports should increase. We learn that in theory, right? We learn if the demand increases, prices should go up. Okay. We predict inflation. So in reality, sometimes it doesn't happen, Laman. When demand increase, there can be so many other factors that have changed. People's income has changed, this has changed, that has changed. So prices might remain the same. It's so much complex in the real world than what is there in theory. But it's interesting. You need to know the theory to understand what happens in the real world. Okay, right. That is done. Then we come to the last one, guys. This one is identify the lending program implemented by the central bank in order to promote regional development and poverty alleviation. Remember, guys, one of central bank's agency functions. Remember this. One of central bank's agency functions. They support these small and medium enterprises to help them. What kind of stuff they do? So our government, guys, there are different lending programs. I took this from I don't know if this is what is there in the answer scheme. I took this from the latest central bank website. Okay, so I'll show you the Excel sheet that I took it. I was going through that in the morning. I also don't know exactly how, what these loans are, right? Here, this is the Excel that is there in the central bank website. Okay, so here, the name of the scheme, these names only I copied into the thing here. Where is the money coming from? The purpose of it, the area of operation, the maximum amount of loan that they are giving, how much is the interest. You don't have to know all of this, don't worry. So there are so many schemes that the government is implementing, guys. Here, new comprehensive rural credit scheme, poverty alleviation microfinance project, self-employment promotion initiative, and different names, guys. You all don't have to know all the names, but at least know around 4 or 5, because what if they ask a question like this in your year? You can say, in order to promote regional development, central bank is giving so many loans out there. Name 5 of them. I don't know if the answers in the 2011 paper are the same as this. Can you compare and see? Maybe some of those loans they have discontinued. Maybe some new stuff would have come. We don't know, right? So the ones that I'm giving on the screen are the latest ones. Oops, right? This one, right? The ones on the screen here are the latest ones that is there from the central bank website. I'm not sure if the 2011 one also has this. Okay, some of it might be the same. Some would have been cancelled out and stopped. Some new things would have come. So better for you all to know this, Lamai, rather than going with the 2011 answer, because that is now 12, 13 years old. No, there would have been new stuff. They would have gone. See, just remember some easy names. Okay. The Excel is on the central bank website, guys. Just search for the lending programs implemented by the central bank for regional development. It will be there. No, they will not go into the level of asking the purpose of it, who gets it. I don't think that will be very hard. No, personally, even I don't know each of these. But remember a few one. Easy ones to remember, guys. Here there is something called a Saubhagya loan scheme. That's a very common one. Remember that. Then you can remember what? Any easy ones? Here's there is this some COVID thing they have come up with. After COVID, refinance scheme for COVID-19 affected SOEs. SOEs are state-owned enterprises. Aswasumam is not a loan, guys. Aswasuma is a transfer. Now, don't here you can't write Aswasuma, Samurdi. Those are transfers, guys, where government just gives money. These are loans, lending programs, where you have to repay. So usually longer repayment period, low interest rate. Don't confuse those two. Okay. You can write here. Swasakti is also somewhat easy. Then maybe this only writing the abbreviations also is not 100% correct. No. So better for you all to know 4 to 5 of this lamai. Maximum they'll give a 5-mark question. Ideally 4. Okay. They won't ask you to explain. They might maximum ask you to list 4 of the programs like that. So if they ask you to list 4 of the programs, you can do. What's that Roman number? Which one? So this might be different names, guys. These are names that they have come up with. I also don't know why they came up with the names. They've been a previous phase. These are names. Common pronouns. Not pronouns. What do we call proper nouns? Okay. Is that okay? Now this I think was a little bit of a harder question if students did not know. So what I'm telling you guys now, see, 2011 would have been a year where the government was focusing a lot on this. See, they put a current context question, no? See, now this is, we are not very sure of this, maybe because our government didn't focus much on this year. See, maybe 2011 was a year. I also don't know what happened in 2011. Maybe it was a year that they focus. See, a small current context question came, 3 marks. Everything else was normal theory, credit creation. It was the basics. But one of that was a credit. Okay. So that's 2011. Any questions there, guys? Fine. Okay. You remember around 4 to 5 of this, okay? I don't know if they will ask, but in case they ask, you can write something. Okay.